Hi. Today we are going to talk about climate change as a challenge for central banks. Will central banks change their policies to adapt to climate change? One of the major aspects of climate change has to deal with financial flows. For instance, the Paris Agreement of 2015 reflects this challenge by saying that we should make finance flows consistent with low carbon and climate resilient pathway. Since central banks are at the heart of financial flows, the question raised as to what extent they will be able to change their policies, to adapt their policies, and to contribute to this effort in adapting their policies. The presentation will have three parts. The first one will try to show that central bankers are aware of the climate change challenge. There is no doubt about that. But the question is, so far, how did central bank react to climate change? Is this enough? And we will show that there is a need to new adaptation. And we will raise in the third part the question how monetary policy can play a proactive role for transition towards a low carbon economy. First, central bankers are clearly aware of climate change challenge. Look at the Francois Villeroy governance of the Banque de France as this quotation. He says that when the first central bank, the Riksbank, was created in the 17th century, the goal was to finance the war cost of the Swedish government. And he says now, today, in the 21st century, we have a new type of war, which means that central bank has to fight against climate change and its consequences. So clearly there is a need for a change on the part of central bank. Christine Lagarde, the chairman of the ECB, European Central Bank, says clearly, this is another quote, the primary mandate of central bank is certainly price stability, but it has to be embedded in climate change and environmental targets. So this is interesting. And third, a quotation from the Jay Powell, the chairman of the Federal Reserve System, who told Congress recently, climate change is an important issue, but not principally for the Fed. That is for elected officials, not us. So here you can see there is a different point of view on the part of the Fed, which is saying that it has not have to deal with the climate change, whereas the ECB and the European authority think they have to deal with the environmental and climate change issues. And indeed, we can think that if we look at the mandate of the ECB, clearly, if you look at the different treaties which define the status of the ECB, clearly we can see that the ECB has to contribute to the achievement of the objective of the Union, that is the European Union. And one of the objectives is a high level of protection and improvement of the quality of environment. Thus, clearly, the ECB has to deal with this question of environment and climate change. But this will be my second point. So far, how did central bank react really to climate change in the real facts? 2 points here. We have to see that central bank clearly decided to address the problem of macroeconomic and financial stability arising from climate change, but they remain very conservative with respect to the role of monetary policy to support the ecological transition. First, it is true that central banks are very active in dealing with macroeconomic and financial stability since the financial crisis of 2007, okay? And they know very well, and there is a consensus among central bankers that the increase in temperature in the world creates new risks, physical and transactional risk, financial risks, and what we may call systemic risks, that is the risk of instability of the financial system as a whole. And clearly, it is considered by most, but not all, central banks that they have to deal with this question of financial stability in connection with climate change. And in this perspective, it was decided to launch in December 2007 what is called a network of central banks and supervisors for greening the financial system, the NGFS. And we can see that there are already more than 50 members all over the world in this network. Central banks from Maghreb, central bank from España, Mexico, as you can see on the slide, England, Finland, France, but also People's Bank of China, and of course, the European Central Bank. The working axis of the NGFS are mainly oriented toward the question of risk and prevention of risk, what is called prudential regulation, macroprudential regulation, dealing with the stability of individual banks, macroprudential regulation, dealing with the question of the global stability of the financial system, which is the question of the systemic risk, if you want. And also they have been working on the question of scaling up finance to green finance in a way to finance the transition, the ecological transition. But we can see very well that so far, central bank didn't deal really with monetary policy issues, conventional and unconventional issues. This is not on their agenda. In fact, it is true that central banks have a very conservative view regarding monetary policy. One of the major principles of monetary policy of most central banks, and in particular of the ECB, is what is called the neutrality principle of monetary policy, which means that central bank, the ECB in particular, should not deal with the question of the allocation of financial flows, which is because this is done in a very efficient way by financial markets. This view can be challenged because, in fact, it is not really the fact. And precisely, we can make criticism to this view of the ECB. One first criticism is that climate change is a market failure. A second criticism is that monetary policy is not neutral, in fact. It has been biased toward high carbon sectors and assets. And third, it seems that central banks and the ECB in particular didn't learn the lessons of the global financial crisis, which is very useful. These lessons are very useful to deal with climate change precisely. First, climate change is a market failure. One of the major failures is what is called the tragedy of the horizon, which has been put forward by Mark Carney, which is a former chairman of the Bank of England. He shows very well in his studies, in different speeches, that the catastrophic impact of climate change will be felt beyond the horizon of most financial actors, commercial banks, but also central banks, which leads to an underestimation of climate-related risk. And this means that central banks have to take into account this long-term horizon, which is not the case today. Markets do not do the job in this respect. And another reason why we can see that they have market failures, for instance, is this issue of what we may call missing markets. Some markets are missing in connection with this question of climate change and financial flows, in greening financial flows. For instance, one important market is green bonds market, which is not taken into account really by central banks so far. These market failures show that the efficient market theory does not hold when one deals with climate change, contrary to what is put forward by central banks. And these market failures are precisely a case for central banks to use their policy instruments to affect credit creation and allocation. A second criticism is that central bank policies are being biased toward high carbon sectors in recent years. empirical evidence shows, for instance, that quantitative easing program by the ECB and the Bank of England have been biased toward high carbon sectors. Over allocation of high carbon sectors, under allocation to low carbon sectors. There is a study, for instance, the Phoenix study on the ECB, which shows that no less than 63% of assets brought through the corporate sector purchase program, which is part of the QE program of the ECB, have been used to buy bonds issued by businesses operating within the most carbon emitting sectors. And on the other side, sectors most in line with climate objectives represent a very small fraction of this quantitative easing operation. For instance, the green bonds are very small in the part of this operation, only 7% of the central bank operation. Now, it seems that central bank didn't learn the lesson from the global financial crisis. What is the idea? The idea is that monetary policy is not a sufficient condition for financial stability. This is what is called the tranquility paradox by Minsky. In other words, monetary policy can lead to financial instability if it is not done properly. And precisely, if monetary policy are biased toward high carbon sector, this may lead to future financial fragility and instability. Hence, central bank should take into account this question of high carbon sectors, this question of climate change in their policy. There is a need for an activist monetary policy in favor of low carbon sector and against high carbon sectors. Now, what are the recommendations? This is the third part of our presentation. What are the major recommendations of monetary policy we can put forward for central bank, for greening central bank operations? Well, there have been a lot of proposals by civil society, by academics, which we all converge in major proposals. Here I will select 3 major recommendations. And I will show that there is also a need to change the institutional framework of central banking in the sense of having a green, what we may call a green optimal policy mix. Let's go first to the different policy recommendations. One is that central banks should investigate the impact of their monetary operations. Because if they don't do that, then they will ignore the negative impact of their operation on climate change. So they should make studies and they should be transparent about the result of their studies. And if they realize that they are biased toward high carbon sector, then they should change their policies, of course. Second proposal is the question of the conventional monetary policy, which is refinancing commercial banks, which is a major channel of conventional monetary policy. Central banks should disclose how climate change considerations are incorporated into the decision-making process. In other words, when they ask for collateral to refinance banks, they should green their collateral, they should make eligibility for this impact for this collateral, green collateral. And empirical studies, which are very interesting, have been showing that eligibility has a significant impact on the spread of assets. Okay? It means that eligibility policy can be used to promote green financial flows and can be used to align financial flows with the Paris Agreement. Now, third recommendation is the greening on unconventional monetary policy. Here we have 2 dimensions. First, what we may call the green quantitative easing. Green quantitative easing, it means that when central banks are making operations such as the one I just mentioned, they should promote green operation, green bonds, and so on. Now, we have also this dimension of green qualitativism, which means that central banks should have a selective policy encouraging low carbon sector and, on the contrary, fighting, discouraging high carbon sector, to have a selective policy, which is, of course, the contrary of neutrality principle I just mentioned. Now, a last recommendation, a last change, which is very important, is to change really the institutional framework of monetary policy. A new public policy paradigm based on the coordination of major policies, policy actors and instruments, that is monetary policy, prudential policy, fiscal policy is required. And we need to elaborate a new global policy framework with rule for green optimal policy mix, and also to have institutions in charge of this coordination. And one consequence of this policy recommendation is that the new paradigm I just mentioned implies revisiting the role and the independence of central bank, because central banks should collaborate, coordinate their action with other public authorities. Here, I present a global framework for this green optimal policy mix. And you can see very well that as well as macroprudential, conventional, and fiscal policy can be used conjointly, jointly, to achieve climate change reduction. For instance, macroprudential policy should integrate, means that capital ratios should integrate climate-related risk. Macroprudential policy should have green stress test to test the stability and of banks with respect to shock coming from climate change. Monetary policy also, we see, should have a conventional policy, should have a selective eligibility, I just mentioned. Differentiate reserve ratios according to the type of assets. Also, unconventional monetary policy, this is green QE, I just mentioned, but also instruments like guarantees by central bank to sectors, to green banks, for instance. Taxation can be used. Carbon pricing and taxation is part of fiscal policy, which has to be implemented. And also, of course, we need public investment, subsidies to support green sectors. And this is also a very important aspect. You see, this is what we may call a green optimal policy mix, in which monetary policy is only a part of the policies and should be coordinated with prudential policy and fiscal policy. Now, to conclude, if you look at the history of central banking, you can see very well that central banks in their past has always adapted to the challenge of their period. For instance, during the post-war period, we had what we may call Keynesian central bankers, which had to make arbitrage between employment and inflation, because at that time, the question of employment of inflation has to be dealt with, and they were using the Phillips curve to make this arbitrage. After, at the end of the 20th century, during the 80s and 90s, we had what we may call the neoliberal revolution with monetary central bankers. We had then independent central banks, which focused on monetary stability, because at that time we had high-level inflation. So this was the major challenge of central bank. But now today, the major challenge is a transition toward a low-carbon economy. So we need a new generation of green central banker whose priority should be to curb down climate change. You see, this is the idea that central bank has been adapting in the past to the challenge of the times, but today they have to adapt themselves. So this is the end of my presentation. I will give you this slide, and at the end of the slide, you'll see the references of the major papers to which I referenced myself during this presentation. I thank you very much.